Great. And with that, just wanted to sort of give everyone a sense of sort of how we're going to be spending the next 60 minutes or so. First up, I just wanted to say it's an absolute privilege today to be speaking and have the opportunity to speak with two incredible individuals who lead sort of socially focused microfinance institutions, one in Asia and one across Latin America. I'm going to let them introduce themselves, but it's the privilege to speak to both Shoira from Arvand Bank and Carmen from Mujer. Shoira, if you want to sort of just kick us off and introduce yourself and Arvand, and then I'll hand to Carmen.
Yes, I'm Shoira. I'm CEO of Bank Arvand in Tajikistan. We've been in market for 23 years. We started as a small project with the goal to create access to finance. We went through several transformations, and 5 years ago, we received our banking license. So as of today, we're a commercial bank.
Wonderful.
Hi,
Yeah, Carmen, jump.
Yes, hi, how are you? Thank you, Pranav. It's a pleasure to be here with Shoira and all of you, sharing from her unwavering commitment to financial inclusion and the holistic well-being of women. We have been working in Latin America for more than 34 years now, supporting women, giving them access to financial services, health services, and education. We believe women are agents of change. So we are working very hard to actually support them with what's needed for them to actually achieve their full potential.
Wonderful, wonderful. Thank you so much, Shoira and Carmen, for those introductions. We are, of course, incredibly excited to have both of you on this conversation. For those of you who don't know, both of these institutions have been participants of the Microfinance Index since year one in 2022. And we're going to be hearing a lot more about their experiences, their decisions to participate, and what they've been learning and doing with the data. Just wanted to give you a sense for, again, how we spend the next sort of, 57 minutes or so. First, I'm just going to be walking everyone through some of the sort of just a bit of the evolution of the Microfinance Index, what it's taken to make it possible, as well as just a glimpse into some of the incredible findings and insights in the report. We're then going to be moving to a bit of a Q&A with both Shoira and Carmen and hearing from them about their experiences with listening to end clients and what their hopes and aspirations for it are. That's going to be about 20 to 25 minutes. And that's going to leave us about 15 minutes for all of your questions. And so my one big request to all of you is to drop the questions in the chat over the course of the conversation so we can take them in the end and hear from the two panelists about them. And just before I dive in, just to get a sense, we have so many folks calling in from Kenya, from Switzerland, from Lancaster in the UK, in Zambia, from Barcelona, from Costa Rica. So just to give you a sense, Shoira, Carmen, there are some very excited folks to be hearing from both of you, and we're very excited to have them here as well. So without any further ado, I'm going to share my screen and dive into the index. Shoira, can you confirm to me that you can see my screen with the Microfinance Index? Great, you can. Fantastic. So,
yes.
Wonderful. So let me dive right in. So today, I genuinely do have the privilege of being a spokesperson on behalf of our incredible Microfinance Index team and share with you what has been a monumental effort to listen to the voices of end clients and borrowers of microfinance institutions and financial service providers around the world. Before we dive into the insights themselves, I just wanted to give you a glimpse into the journey that we've been on. Back in 2021-22 is when we started the index with our inaugural cohort of 72 financial service providers and listened to over 17,000 voices from around the world. We then sort of moved to 2023 with 114 financial service providers and expanded to listen to over 50K voices around the world. That's further grown this last year. And we're incredibly excited for what the future holds because we're hoping to listen to over 100,000 sort of end client voices, which is going to be a truly, a tremendous milestone for us as a community that's focused on using financial services as a force for good and inclusion in the world. The first thing I wanted to sort of direct everyone's attention to is this number, 126 financial service providers. The first big thank you goes to all of them, including, of course, Arvand and Mujer. Without the participation, the partnership, and the the real social mission focus of these financial service providers, none of us would be here today doing this work. As you can see, we sort of worked with institutions across 45 countries. And sort of those of you who are close followers of the Microfinance Index will notice a slight shift in the geographic representation. So we've had a greater representation from Latin America and the Caribbean this year, a slight reduction in Asia, and a slight increase in Africa. So that's something we're constantly trying to manage year on year to continue adding value to the folks we work with. The second big thank you goes to the members who make this work possible. These are impact investors, development finance institutions, networks of FSPs, as well as sort of impact organizations really care about listening to the end clients. And it's with their support that this work is possible year on year. So a big, big thank you to all of you for making this work possible. The next big thank you, and I did start with this, and I just wanted to emphasize this, that today, again, I have the privilege of being a spokesperson on behalf of an incredibly, hardworking, talented, and committed team across 60 Decibels. You have the names on the screen, but I just want to emphasize that the report's been written by this group, across multiple offices and countries around the world. The data has been collected by, individuals across our sort of services and research or operations team who manage an incredible team of enumerators who collect this data globally. It's been supported by individuals who manage our clients, manage our product, manage our technology, the engineering on the back end that makes this all possible. So a big thank you to all of them. And last but not least, Emily, who's our designer, who's, I'm sure you all are enjoying these visuals as much as I am, and that's all because of her. So big thank you to the team, and this is really who this is on behalf of. And then last but not least, the most important stakeholder, who unfortunately will not be here on this conversation today and often, may not actually read the report, but we just wanted to emphasize that without the voices of the end client, none of this work would be possible. The over 36,000 borrowers who we listened to, who spent on average 22 minutes speaking with our researchers, without their support, this wouldn't be possible. And so I just wanted to read out one quote from one of them who says, "I've been able to improve the quality of meals in my family as compared to before getting the loan. I used to struggle and stress when it came to paying school fees for my children, but now I feel a bit less stressed because I can afford it." A male respondent who's 57 years old from Tanzania. So that's just one of his responses from many, many others and representing many others. So a big thank you to all of them for taking the time. And so with that, just an overview of what the Microfinance Index what we collect. So we collect data across 6 dimensions particularly. So access, business impact, household impact, client protection, resilience, and agency. To get the detailed list of questions, of course, you can go to the report itself. We also allow members to sort of pick additional modules on climate resilience and gender and deep dives on client protection, as many of you may know. But just to give you a glimpse of, for those of you who may not be familiar with what kind of data we collect in the index and in our interviews with end clients. And with that, I know I've been giving you a very, very long prelude, and I'm just conscious of time as well, but I really want to now move to the insights, which I think will be very interesting for all of us. The first 2 insights, before I open up to them, are insights that have further emphasized our learnings in previous years of the index. So the first one is around first-time access. For those of you who've been following the index, you'll know that we've consistently seen that microfinance institutions, financial service providers, sort of are continuing to reach those who don't have prior access to credit and formal financial services. So as you can see on the chart on the left, you're really beginning to see that, the extent to which, it's over sort of 50% of respondents report that this is the first time that they're accessing such a loan and they didn't have prior access. We see similar results across both male and female respondents. I'm trying to get my cursor there. Great. So similar respondents, similar sort of levels of first-time access between male and female respondents. We actually saw something similar between both rural and urban clients as well. So just, in some sense, an emphasizing of results from previous years about the extent to which microfinance continues to reach first-time access customers successfully. And the second, again, should not be a surprise to most of you, is around the extent to which group loans are reaching excluded groups and closing the gender gap. So, those institutions that are offering group loans tend to reach a greater extent of female borrowers. As you can see, that's 85% versus individual loan providers. And this is also true in terms of reaching lower income customers, as well as customers living in rural areas. So group loans continue to prove to be an effective tool to reach the, formally underserved underserved customers. And also, as you'll go into the report, you'll understand the extent to which they're also having a deep impact in terms of financial management, in terms of quality of life impact, and client protection. Moving on to the next piece, and obviously client protection is something that is really, really close to all of our hearts to ensure that we're not just providing high impact services and high quality customer experience, but doing it in a way that is inclusive and truly reaches those who need it. And on the screen, just before I dive into the insight is the this is the segmentation of results and outcomes based on those who know their rights, i.e. the extent they're aware of how to report harassment, and they are sort of they have the knowledge about it, they have the information about it, versus those who don't. And so the figure on the outside in the lighter color is those who know their rights, versus the one in the middle is the one who reflect respondents who don't. And what we see is across multiple dimensions, whether it's improvements in business income, whether it's decreases in stress, whether it's increases in confidence levels, those who know their rights report deeper impact. And so it really goes to emphasize the importance of client protection when it's, when you're trying to achieve sort of an impact on the lives of those you seek to serve, is ensuring that they understand what to do in the event of sort of a negative, consequence that they experience along their, their journey. And so that's the first piece. But the second piece is just a bit of a reminder for all of us that when it comes to creating this impact, there's a distinction or difference in the impact experienced by those who are more vulnerable versus those who aren't. So, here we define vulnerable respondents as those who find it difficult to come up with an emergency expense, and those who are non-vulnerable are those who don't find it very difficult. And what you can see is the impact actually continues to be deeper for those who aren't vulnerable, and a little bit less deep for those who are vulnerable. And that just goes to show that to actually have the expected and ideal impact on the lives of those who are truly vulnerable, we still have some way to go. So really the synthesis being the sector is creating a lot of positive impact, but there's room for improvement in reaching those who are truly struggling in the event of financial shocks. Then moving on to an insight that's was so heartwarming to see in this year's index, the impact and role of female-centric financial service providers and how they're leading the way in terms of impact and empowerment. Before I talk about the charts themselves, when you look at the report, you'll see this definition as well. But female-centric FSPs, we define them as those who have over 90% of their clients as being women or female borrowers. And so what you're seeing on the left-hand side chart is just take the impact outcome of increased respect, which is one of our indicators under the agency dimension. And you'll see how female-centric financial service providers who are serving rural clients are having the deepest impact, followed by, female-centric FSPs who serve urban clients, followed by other FSPs in rural and urban areas. And it just, the same thing applying in the context of influence in the household as well. And that's just incredible to see the level of depth and just the extent to which the female centric financial service providers are achieving that kind of empowerment and impact. And similarly on the right, when it comes to the awareness that borrowers have about their ability to report harassment, for instance, or the extent to which their repayments are heavy or somewhat of a burden, clients of female-centric financial service providers in this case are half as likely to report them being a burden. Again, just a testament to the extent to which that empowerment, that client protection angle and element has been central to the work that these organizations do. And then my last insight for now, before I sort of actually pause this and go back to our two incredible panelists, is one of the insights that was, again, really new in this year's report, which was around the extent to which mature financial service providers are outperforming younger and older peers in client impact. And before I even, again, get into the insight and get into the data, just a bit of an alignment on definitions, which is, we had a range of different types of financial service providers participate this year across, multiple attributes. But when it came to how old or how tenured they were, we had many that were in the legacy category, i.e. operating for 20 plus years, those in the mature category operating for 11 to 20 years, and those in the younger or the growing category operating for less than 10 years. And of course, before I again share the insight, a caveat to share that these results are just indicative and early stage because we have different levels of, deep penetration in each of these segments. But, one of the things we noticed was that the financial service providers in the mature segment were actually outperforming both peers in the growing and the legacy segments in some sense. So, along the bottom, you can see this is the data for growing FSPs, this for mature, and this for legacy. As you can see across most of the indicators, just taking a handful here, whether it's providing a scarce product or improving client management, the mature FSPs are sort of outperforming their younger as well as their slightly older peers. And we're still sort of processing what this could mean, but one of the early hypotheses we have is that when it comes to, for instance, data and sort of awareness of the rights and terms, the growing FSPs are doing quite well, whereas the legacy FSPs, there's an element and opportunity for them to be more tech savvy in terms of bringing that data angle into their work with end clients. So again, before I move on to the panel discussion, I just wanted to say that, the real objective here is for all of you to get interested and curious and excited about all of these insights. And there's a lot more in the report itself. Many of these are explored in more detail with caveats and questions and ideas for future analysis. And hopefully, really, the hope here is for this to be a tool and a platform for us all to be more client-centric and use this data to serve clients better around the world. Wow, well, I know I've been speaking at you for the last sort of 15 odd minutes, and I'm going to stop that now. As I mentioned, if you have any questions about the index itself, please do drop them in the chat. To the extent we can get to them today, we absolutely will. But now I'm really excited for for me to do the questioning and for Shoira and Carmen to do the answering. So with that, I'm going to dive in first, perhaps with you, Carmen. One of the things, we're very curious to understand is, the motivations and the drivers of the incredible financial service providers we have the privilege of working with. And so, both you and, Arvand have been participants in the index since the very beginning in 2022. And so my first question to you is, what prompted that and why do you continue to participate?
Thank you very much, Pranav, for this question. And thank you very much for sharing all these insights. And as I invite everyone to actually read more of the report because you have tons of information there. Since joining the index, actually our conviction has been clear. Rigorous measurement is a powerful tool to drive real and lasting change. We need to measure the impact. At Mujer, we believe that to actually transform the lives of women across Latin America, we need to understand the true impact of our interventions through data, and evidence. We need that evidence. We need that data. We need those stories, as you were sharing. We have thousands of stories, responses as the one you share with all of us. So in 1990, we began our journey with the firm belief of empowering women and providing them with access to finance that was essential to actually eradicate poverty. After 34 years, we have impacted the life of 2.5 million women. We have deployed more than $4 billion in small loans. We have deployed more than 10 million health and well-being services. And our organization actually wants to continue expanding the impact. Our work goes beyond providing loans or financial services. It's a model that seeks actually to empower women with every aspect of their life and participating. Since we launched our participation in the Microfinance Index in 2022, Mujer decided actually that we needed to join the index because we deeply believe in the power of measure, as said, to drive and to sustain our change. Because actually we won't be able to change what's needed if we don't measure, if we don't have access to that data. Our mission has always been to transform the life of women in Latin America, and to achieve this, we really need to fully understand the impact of our interventions, because otherwise we won't be able to adapt, we won't be able to change what's needed. The responses have allowed us to identify, for example, how many women are accessing the credit for the first time, to recognize the importance of financial education, to quantify the credit's impact on their income, to grasp the burden of loan repayment of their everyday life. So that is key for, we need to understand that in order to understand if we put in place the right instruments, if we put in place the right services, if these services are really adding value to them. So in essence, measuring actually the impact we are generating allow us to understand the model if we need to be adapted. Without data, without evidence, we won't be able to keep up with the changing needs of the women we serve. Participating in the index is not just an exercise of transparency, and I want to be very clear about that. It's also a valuable learning opportunity for us. It's very useful to get to know what we need to change, what we need to adapt, to get to know if we are doing well. Every year we participate, we reaffirm actually our commitment to continue improving. And that is mainly what we seek for when we participate in this index. It keeps us aligned with the global best practices, because it allows us to get to know also what's going on in the sector, what we can replicate, what are those lessons learned that we actually can leverage. So for Mujer, the process of evaluation does more than just measuring our impact. It helps us to evolve, it helps us to keep improving our solutions to better serve the women we want to serve.
Thank you so much, Carmen, for that incredibly thorough and thoughtful response. Because I think, just to summarize, I guess what I'm hearing is that, obviously you have this core mission of serving women and sort of improving their lives, and participation in the index is really deeply linked to that mission to understand, are you adding value? How do you need to adapt? What can you do to continue having that impact? And there's one big takeaway I just was thrilled to hear you say that was, this isn't, about just an exercise or ticking the box. It's about really understanding and improving impact. That was just incredibly wonderful to hear. And Shoira, I noticed you were sort of nodding along to a lot of what Carmen said. So I'd love to hear, how Arvand sees this.
Yes, I fully agree with Carmen, and she mentioned majority of the things that motivates us to participate in the survey. We also driving sustainable finance and creating access to finance. There are many things that we do, which unfortunately are not visible when you just look at P&L and balance sheet of the bank. Yeah, so things, the surveys like this, they actually confirm a big chunk of the work that is not just shown in the financial results of the bank. And why I like this approach is that, as Carmen said, you hear the voices from the first hands. And we do all kinds of surveys internally as well. But I think when clients are open to someone else, not the bank employee, and they're transparent, it's completely different thing and a different approach. Because if I send my employee to our clients and ask them all kinds of questions, of course they will be polite. Yeah, it's a culture. They will not be probably so open, and they will be saying different things. They will be saying something that bank employees should hear. And this approach, why I like it, is because it opens up a different angle. Yeah, they can be open about what they feel, what they think, and what they experience with the bank and with the loan that they receive. And it gives a different angle on information. And as Carmen said, of course, what's measured, that's achieved. Yeah, unless you cannot measure, you will never achieve it. So the KPIs and goals that we set for ourselves in terms of sustainable finance and client protection, access to finance, it has to be measured. But there, as I mentioned, there are different ways of measuring it, and I like this particular way because you see your dynamics, your trends, and it gives you a clear indication of what should be changed and what has to be improved. And if we do some changes from point of view of the bank for cost-saving purposes, for making our services accessible, we do not realize that, on the other hand, on the side of the client, it gives them a lot of psychological support as well. It's not only cost saving and not only being accessible. It gives them comfort, yeah, and the reliance on the bank for the work that we do with them. So yeah, transparency, benchmarking, showing the results, showing non-financial results, but also a big part of it is to see what's next and in what direction you should be developing more if you want to reach your goals.
Incredible.
Yeah, that's all from my side.
Thank you so much for sharing that. And I know that, like you said, there was a lot of what you said, which was sort of really seconding what Carmen had just mentioned. But I just that idea of, it's about going beyond sort of what is obviously important, i.e. the loan book, all the financial information you have about your clients, but trying to go deeper. And I know one of the things you mentioned, which I really liked, in our sort of prior conversation was about how, you can see repayment behavior, for instance, but you don't always know what's going behind that. What are the challenges that they're having to experience to actually meet their obligations? And obviously that's some of the questions we ask in the client protection section. So incredibly helpful, and also just going beyond the loan book. I really, really love that as well. And so if I can actually now sort of, again, sort of go back to you, Shoira, based on everything you described, because you talked about specific insights, using the data to learn and improve. If there were one or two key insights or data points that emerged from the 2024 index that were relevant to Arvand, what were they? In the sense, did they help validate a hypothesis you already had? Did they help you discover something new about profile, experience, impact, client protection? Would love to hear some examples, Shoira.
Yeah, from the very first report, we realized that our clients don't know much about other services that bank provides, like savings and digital channels that we offer. So we realized that since the main contact with our between the clients and the bank is the loan officer, of course, the majority of information that goes to the clients is about loans. And that's the only thing probably loan officers talk about. So that's what one of the key reasons why we changed our loan officers into the universal bankers. So they now sell all the products, and now they talk about the insurance, about savings, other services as well. So this was one of the key learning points. And the second one, as I mentioned earlier, the time to decision on loans from point of view of the bank is cost saving. Yes, the shorter is the process, the less costly it is. So we invest a lot in the digitalization and making the process smooth. But now, after looking at the report of 2024, I realized how big it makes an impact on confidence of the client in the bank, because now they and their client, from the resilience point of view and client protection point of view, time spent worrying about finances has decreased a lot. So now they don't have to worry because the bank is quick in making the decision if they need the money. So it's a different, angle to it, which is also an eye-opening for me, that it's not only cost saving for us, but it's also a level of comfort. And now I'm looking also at the being accessible to the clients. I see the difference between 2022 and 2024. I realized that access to finance, it's not only location of your offices and number of offices, because we have not changed much in 2 years in number of offices, but we've done a lot in terms of digitalization. So now we're accessible because we're have digital channels, the mobile application, there's online loans, online deposits. So digitalization plays a huge role on making finance accessible. So that's the other hypothesis that I got confirmed by getting the report on for 2024 and seeing the dynamics and changes from a client protection point of view, from resilience point of view, and being close to the client. Thank you.
Thank you so much for that. Sure, I was just trying to take some notes, and again, just to sort of synthesize what you said, there was three very concrete things that I heard around, moving from them being loan officers to universal bankers to give them a holistic sense for what's available from Arvand. The piece around time savings for you also means potentially less, as you've seen in the data, reduced time worrying for the client. So it's like a real win-win in terms of lower cost for you and lower worry, which is so important for the clients. And then access not just being about the loan offices, but also other channels to actually sort of help your clients understand what you do and how they can access your services to actually boost those who are accessing your services. Incredibly sort of specific and pointed insights. I am going to move to Carmen, but one of the things I'm very curious to learn about Shoira, and I know this will come in our next couple of questions, is sort of what this is informing and what this is helping you do with specific examples. I know you already give a few examples of what you're doing with the data, but really how the changes over time are informing, your strategy at Arvand. But before I get into that, Shoira, I'm just going to kind of move to Carmen because I'm very curious to hear from Mujer's perspective. If, I know you're operating in a different market. And so what are some of the 2024 insights that struck you, Carmen?
Yeah, thank you very much, Pranav. And basically, participating in this index has been very eye-opening, I can say, and in some cases surprising us, as it has undoubtedly given us a very deep understanding of the outcomes of our operations. So thanks to these insights, we have been able to see the tangible impact of our model, but we have also identified valuable opportunities for improvement. Over the past 3 years, our access to the indicators have confirmed that at Mujer, we are truly reaching some of the most underserved populations. So, and this is what we pursue. So making actually a real difference in this population is what we are looking forward to. And the index has allowed us to confirm this, has allowed us to really confirm that we are truly reaching some of the most underserved population, making a real difference in financial inclusion for women across Latin America, across countries, the countries we operate. So it's powerful to see that 59% of women, the women that we support, have never accessed a similar loan before. This is a huge percentage of clients that are actually getting into the financial system, that are actually getting access to the financial system. 58% share that they couldn't easily find a good alternative to loans and to the type of loans we are providing. So this reaffirms the unique and essential role we are playing actually in these populations, empowering women and expanding their financial opportunities. Another key insight is basically that 88% of women reported an improvement in the quality of their life, thanks to Mujer and the access to the loans and the access to the needed education and also the health services. So this impact is evident, this impact is tangible. Our beneficiaries are investing more in their children's education, ensuring better and more nutritious meals for their families, and making meaningful improvements to their home, as you were sharing with the story a few minutes before. So it's clear the reflections of how access to the services is really transforming everyday lives and empowering women to build brighter futures for them, for their families, and of course, they will have a positive impact in their communities.
Incredible, Carmen. Just that last point to sort of take from that. So obviously there's that first point around inclusion, so reaching low-income women, but then that last one around sort of really deep quality of life impact, because that's really, as in the dimensions, we try to sort of collect this data across multiple angles of impact and then multiple angles of client protection. So it's incredible that that's data that's validating your sort of your model, your mission, and sort of informing, like you said, in an eye-opening way, what you're going to do in the future. And I guess, Carmen, one of the questions I'd love for you to think about as I sort of move to Shoira for a second is, what is this enabling you to do at Mujer? So, for example, tangible examples of any changes you've made, or is it helping you validate your work and actually expand the extent to which you're creating impact? I would love to hear sort of examples of that. But just for Shoira, back to you for one moment. I guess, you gave very specific examples of how the data links to sort of even just taking, say, loan officer to sort of universal banker or, digital channels for engagement. One of the things we're very keen on to make sure that the index continues, being incredibly relevant to what you do and continues providing those eye-opening insights is, to look back and say, hey, what worked really well in the sort of journey from 2022, 2023, 2024. And so, could you say a little bit about the year-on-year changes and how sort of getting under the why behind that is helping you do better work at Arvand? Shoira, can you still hear me? I think she may be stuck, but that might just be me. Okay, we'll let Shoira get back. But Carmen, maybe I'll sort of just come to you in the meantime, if you don't mind, and ask you about, like I said, you mentioned very specific data points, and I'm curious how they're informing actions and sort of greater impact at Mujer.
Yeah, thank you, Pranav. Basically, what it has allowed us is, as I was stating, it has allowed us to adapt the services we are providing women, adapt the instruments we are deploying for women to get access to financial services. It has allowed us to even rethink the way we are providing the services and the access to services. Mm-hmm. Actually, one of the things we have seen is that when we expand to certain regions, for example, in Mexico, when we expanded to the southeast of Mexico, we needed to adapt the programs to hybrid programs because actually connectivity wasn't there, digital education wasn't there. So it's kind of, we get to know more from the index and we get to know more also from our experience on the ground. And that insight information is, as I was stating before, it's what is allowing us to keep moving forward, keep adapting ourselves to the changing needs of the women we serve.
Got it. So just keeping their voices front and center, understand their evolving needs, and sort of really designing around that. Sort of some of the things that I definitely took away from that, Carmen. Shoira, I know we lost you for a second. Can you hear me fine?
Yes, sorry.
No worries. Data and Wi-Fi's can be, quite, funny sometimes. So, Shoira, I don't know if you remember my question. I can quickly repeat it for you if helpful.
Yes, please.
Yeah. No, I just, one of the things that we're particularly curious about is the value of year-on-year participation in the index and seeing changes over time. So it's one thing to see a point-in-time insight, which is really valuable, but the one thing both you and Carmen have emphasized is the role of the evolving, sort of changing, sort of, experience and impact of your end clients. And so, could you say a little bit more about that, i.e., what have you seen in terms of those changes that have been particularly valuable and informed how you do what you do at Arvand?
Yes, seeing how the figures raise is, of course, a very motivating and inspiring thing. Yeah, it's besides all the other things that we mentioned, the value of the report, it's a huge motivation for the employees to see our results and to see how well we do year to year. Mm-hmm. And, lives improved from 22% to 71% in 3 years. Or understanding the conditions of the loan from 66% to 89% now. So it gives I think a huge motivation to the employees, first of all, that we do well, and all the efforts that we invested in making sure the clients have the contact information, they know who to call if something goes wrong, or they understand the conditions of the loan agreement, and along with the financial education that we do. So it goes hand to hand with the business as usual, but our financial services and non-financial services that we do. And I think this survey also shows the results of your non-financial services, because we have financial education program, and usually, it's a very short seminar of 4 hours, and you don't really know whether all you have invested pays off in terms of these financial education sessions. And now I see that it does, because clients make more savings now, according to the results of 2024. They're better in terms of repayment, and moreover, as I mentioned, they understand much better the loan conditions that they have. So these are the things we're proud of, but also I think the number one reason for pride is that the first access, that Arvand was the only choice for such a high percentage of the clients, according to the results, also shows that despite the growing competition, there are markets, you have the certain market share, but also you have the trust of the clients now that you are becoming the number one choice for them in terms of financial services when they think about it. We also see increase in percentage of other services used. It's also an indication of trust, that besides getting a loan, now clients are replying that they're interested in savings and insurance that we provide as an agent. So that's a next level of partnership with the client, I think, when the trust increases and they start using other services as well.
Fantastic, Shar. Just like the number of specific examples around sort of understanding loan terms, trust in your products and services, seeing the extent to which they're using not just the loan but additional services is super valuable. And sort of clearly, I just, oftentimes we're focused on, using the end client data, as you said, and I know Carmen mentioned this, it's not just about transparency, it's about outcomes and understanding that improving those outcomes, but just really a helpful perspective around, a strong motivation for, an organization and employees who care about impact, seeing those, those tangible improvements, those tangible changes in the customers' lives about what they're doing, a great motivator. Just wanted to flag that. Carmen, I can see that you have your hand on the mic in case you want to say something to that.
No, I totally agree. I think that, yes, sometimes we don't speak much about the employees and how positively this impact our own team. And that is key. For me, that is something that we should be looking much more in depth.
Wonderful, wonderful. I actually see that we've gotten a lot of really interesting questions. So I'm actually going to move to some of those. Some of them are about the index itself that I'm going to take in a moment. So why don't I take a couple of those questions? And in the meantime, this is a really interesting question in the chat that I just noticed. And Carmen, Shoira, would love for you to think about it. Obviously, in the index, we collect data on multiple dimensions. One of the questions that's come up is, what are some of the other things that you're interested in learning about that you're not currently getting in the index that we could consider in future years? I think it's a really great question. Before you answer that, I'm just going to quickly respond to a couple of questions that have come up about sort of the methodology and how we do what we do. I see one of the questions, which is around, from an anonymous attendee, which says, impact seems to be weakest, lowest in the legacy category. Do you have any insights on the reason for this, as it seems to go against expectations? And so, the first short answer is there's, again, given that we're trying to be as, independent and thorough and robust as possible, I have to say that these are definitely early insights. We will see them evolve, hopefully, with larger and larger samples in the future. That's one. And two, any responses that we have are definitely more hypotheses rather than definitive sort of answers. But the two hypotheses that we have is when it comes to legacy institutions that especially around things like understanding loan terms, working with technology and digitization, as well as making clients aware of sort of their rights as part of the loan. There's probably especially with the advent of GDPR, which has sort of become, finding its way into different markets around the world, a bit of a need perhaps or an opportunity for legacy institutions to adapt faster. And then for the growing institutions, they're, potentially they're, doing a great job on first access, but, still have room for impact and deeper impact as they build relationships with their clients. Because one of the things we've seen in previous years of the index as well is tenure is in fact correlated with deeper impact. And so that's just something to potentially explain that. Again, these are just early responses. And then actually, why don't I pause there for a second? And then, Shoira, Carmen, I'm curious if you had a wish list of questions, what would be on them?
Well, actually, regarding a wish list of questions, what we have seen, actually, when we started with the index, obviously we were talking about financial services. But as said before, Mujer is much more than access to financial services. We provided this comprehensive approach. We provide health services. We provide access also to education. So right now we are already working with 60 decibels in trying to see how we can be measuring also our portion of health services and also education. So that is something that we will see, I think, in the future for Mujer. We are looking very much forward to have some results in the near future. And of course, that will allow us to kind of be looking into the model as it is, as a comprehensive model, a holistic model that goes much more beyond financial services.
Wonderful. Shoira?
Yes, in addition, I would like to raise an issue of digitalization and digital channels on how this impacts the client relationship, whether they're satisfied or not, what the channels they use, are they comfortable with this, and whether, you know, physical touch should be still there, to what extent, and at what moments and what issues when the client faces certain issues, maybe at that point they want the physical contact and not going only digital, because we're all caught up with digitalization. Maybe we get it to the extent that it's not it becomes not comfortable for our clients. So this is something I would suggest to have.
Amazing. And just, you know, these are early days, but in planning for the 2025 index, which of course we're incredibly excited for, digitization is one of the sort of themes we're sort of exploring how we can add it on. Obviously, everyone here, you know, is also aligned that we need to make sure that the burden of the interview on the respondent needs to be sort of balanced with the level of data and insights we can gather to make it impactful for them. So that's something we're trying to balance. And then Carmen, to expand on Carmen's point, we already have questions in our household well-being section, of course, around, you know, spending on education, healthcare, home improvements, and meals, but definitely well noted, something for us to keep in mind for coming years. More questions, more lovely questions. I think just a couple more about the index itself. I think just up top, you know, there's definitely a deep dive question around Cambodia, which, you know, from David. Thanks so much for that question, David. Obviously, we're very happy to have a longer conversation on the side, but I think, you know, as you can see, the data sort of is pretty, you know, there's a lot of, it's quite sobering in terms of the client, you know, the client protection risks, as well as the lower impact outcomes in that market. You know, it's a fairly sort of complex sort of situation, and so happy to sort of dive in separately about that. We don't obviously have the answers for, you know, a lot of the financial sort of and macroeconomic trends in that country, but from a client perspective, we have a lot of rich data and also a report that you can sort of move to, but happy to take that conversation offline. I think also, again, I'm just trying to balance. I mean, actually, this is an interesting question that I'd love to get Shoira, Carmen, both of your thoughts on, and I'll maybe answer a couple in the meantime. So one of the questions I'd love for you to think about is around the future of microfinance. And there's a question around what do you see as the future of microfinance, and especially in the context of the rapid advent of fintech solutions, you know, which is again, it's a trend that has its pros and cons, its risks and opportunities, as well as with other challenges around things like climate change. What role do you think microfinance could be and should be playing in the future? So I'd love for you to think about a response to that. And in the meantime, I'm going to answer a couple of other quick questions, yes, changes in the indicator since the first administration of the index. So the attendee has asked, what changes we've made in the indicator since 2022. And there's several changes in terms of the structure of, just in terms of making the index more robust. So one, we've added questions in the client protection module around unexpected fees. We added an entire dimension around agency and the impact on sort of not just well-being, but also like decision-making and confidence in the household. We increased the sample size per participating institution from 250, which was earlier giving us an 85% confidence interval and margin of error, to now 275 in the last 2 years. We have sort of additional modules that are optional around going deeper into client protection, as well as climate and gender. These are the ones top of mind. I imagine there might be a couple of others, but I hope that gives you a sense for what's improved and what's changed in the index. So yes. Carmen, perhaps we can start with you. talk to us about the future of microfinance.
Yeah, well, I kind of share with you what I see about the future of microfinance in the sense that I see microfinance adapting because the beneficiaries, our beneficiaries, have changed. They shifted. Actually, majority of our beneficiaries are millennials, centennials, most of whom are using digital devices. They are digital users. They prefer immediate online services. So we have to be very well aware of this. We have also to actually be very well aware that fintechs have emerged as a solution to women limited access to finance. And actually today in Latin America, you have tons of fintechs, you have many digital banks. So actually the microfinance sector will have to adapt itself. We have to also think that in the near future, there are certain trends like artificial intelligence, actually, as you were stating, climate crisis that we all know that the effect of this climate crisis is actually disproportionately affecting women. So we have to be very well aware of this. We have to be looking into this intersection. You can say women and climate change. You can say women and rurality. You can say women and artificial intelligence and many other things. And with that in mind, we have to keep adapting ourselves. What I foresee in the future is for many organizations to be working much more together, working in some cases, actually bringing into the table different services, have been able to consolidate in some cases the services they are providing. If we really want to reach more women, if we really want to generate a much bigger impact, we don't have to reinvent the wheel. We will have to be working much more closer. We will have to be working in a much more coordinated manner. And of course, with that in mind, we will have to also seek to be advocating for some changes, at the regulation level. So that is what I foresee at the microfinance sector as a change. And of course, technology is out there, and we will have to incorporate much more technology now in the near future.
Wonderful, Carmen. And so just to summarize, you're saying there's so many different sort of influences, the rising growth of fintech, the climate crisis, as well as AI and sort of technology innovation. And so it's about adapting, but not reinventing the wheel, getting closer to your clients and really understanding sort of how you can meet their evolving needs amidst all of this change. Shoira?
Yeah, I think microfinance sector is very flexible. Yeah, we have been client-centric from day one. We, as I already mentioned several times, we care beyond the figures and financial results. That's why we know about the needs of our clients much better. Yeah, and we have that already in our DNA. Yes. So whatever new risks come up, and you mentioned the climate risk, of course, the micro entrepreneurs, clients who have low access to finance, most of them are in rural areas, most of them are in remote areas, are the ones who are exposed to climate risk much more. Yeah. And they will have this challenge as a big challenge. And there's no one who could make them aware of this risk better than we are, because we understand that the climate risk will turn into the credit risk. So we have to, again, take care of our clients and doing it beyond just giving loans. So in some cases, and I see that in our experience, that we are the first ones who talk about climate risk to our agricultural clients, for example, and we are the ones who offer them new solutions, new projects, new type of approach in their activities, because we worry about what will happen to their business and how it will change their repayment capacity. So I think there's a lot of work to do for microfinance. As Carmen says, we are flexible, we're changing, we are going digital, we are going in in using the up-to-date technology to making our services accessible. But there's so many things still to do that, and as long as there are micro entrepreneurs, those who's just about to start their business at the small scale, there will be always need in the services that we provide. And this goes not only to loans, to other type of services and to non-financial services as well.
Amazing, Shoira. Again, just in the interest of sort of summarizing and getting the sort of the key highlights of what you said, I think one thing really stood out is sort of the microfinance is always adapting, always flexible, and always very close to the customer experience. And so making sure that that's something that's important to keep in mind. And so therefore a bit of confidence that we've got this and we will be sort of client centric. And I think someone's immediately said it as well, like climate risk will turn into credit risk. And so acknowledging that and being at the forefront of trying to solve that is a really well noted point as well. I realize we're about 4 minutes away. I think there's a couple of questions that I'd like to answer about the methodology, but one last question that I see, which is important, which I think has implications for both you and both of you, is around vulnerable clients, right? We define vulnerable clients just for that question by as those who find it sort of difficult to actually meet an emergency emergency sort of expenditure, right? Which is, we have a certain sort of Findex defined figure of 1 by 20 of the GNI per capita, but the question is really, so that's how we define vulnerable clients. And I guess the question to both of you as a last thought is, one, there are these exciting opportunities around, being at the forefront of technology and managing the climate crisis, which is a challenge. But there's also the importance of carrying everyone along the way for that. And as you know, one of the insights was around the deeper impact being for non-vulnerable clients. So my one last big picture question for both of you is, what is your hope and work around sort of supporting the most vulnerable within your customer basis? So that's one question for you. But before I hear from both of you, just two quick responses. One, around sort of first-time access. Is this for new to, the question is, does the first-time customer mean new to formal credit in 2023 or a first-time customer in his or her life ever? Thanks, Natsuki, for that question. So this is really about whether whether they had access to any sort of product, i.e. a loan like the one provided by the FSP before. And so it's basically whether this particular product that they are now sharing feedback about was the first time they accessed it. So in that sense, it's about the particular loan cycle they're speaking of. The one thing which is giving us confidence that it's not just about microfinance in general is that the results are actually strong for both newer customers who've been with the microfinance institution less than 2 years and older customers who've been with the MFI for more than 4+ years. So it's actually a pretty robust finding across tenure, and so demonstrates that it's about this particular sort of loan or the FSP they're working with. So final thoughts, Carmen. I know that, I'd love to hear from you about how you think about engaging with vulnerable clients. If you could keep it to a minute, that'll be great, because it's one final announcement before we wrap up. Carmen.
Yeah, but we are always concentrating our efforts in those vulnerable clients, those women that usually don't have access to any type of services. But our purpose is basically, we don't want to leave anybody behind. So we want to actually work in those structural barriers that women usually have to confront when they need access to financial services and other type of services. So that is what we are trying to work, and that is what we are trying to be looking forward, in the sense that even though we have been doing a great effort, there is much yet to be done. And for that, we need to keep working with other organizations that can support the work that we are doing.
Wonderful. Thanks for that, Carmen. Shoira?
Yeah, for us, vulnerable clients are those who live on less than $3.2 per day per family member. Mm-hmm. And that makes about 32% of our clients, our borrowers. And we see the dynamics, whether it's changing or not, but it's based on the income that they make and the income that their business makes. And what's important for us is, after the loan is repaid, whether a business changes in terms of its P&L and equity size. So we keep track of each loan cycle, balance sheet, and income statement to show how, as a result of the loan, that the loan is not only repaid, but actually there's profit remains that makes the business financially stronger. It pays off. They're disciplined, good clients. They have the lowest portfolio at risk. There is no reason for us to change our target group. As I always say, women are even more disciplined in repayment than men are, according to our statistics.
Yeah.
So yeah, we will continue what we do best. And we see the positive financial and non-financial result in interaction with these clients. Why change?
Incredible. I know we're at the mark, Shoira. Thank you so much for that, which is we'll keep doing what we do best, which is serve the sort of the the underserved. And a huge thank you to both you, Shoira, and Carmen. And I just want to sort of say one last thing, which is for those of you, and Carmen, I know you've jumped, so please feel free to. But just as a next step to this webinar, we have two very exciting conversations coming up in the next month. One, which is the awards webinar on the 21st of November, hosted by Sasha, our CEO, with 4 financial service providers in English. And then we have a Latin America focused one on the 4th of December, hosted by Danielle. And, we have 3 Latin America-based financial service providers, and this will be in Spanish for all of those of you who are interested. So just want to put that out there so you're aware of like the kind of content when it comes to microfinance that we'll be focusing on. But with that, I know we're at the hour. Again, a huge thank you both to you, Shoira and Carmen. Thank you so much for your time, everyone, and hope to see you again soon. Bye-bye.